Yes, hello, everybody, legends, holy macaroni. We have got that major drop on the New York Open just a few hours ago, getting a pretty intense move to the downside now with Bitcoin. We are going to analyze here the pure technical analysis, higher time frame, levels to take into consideration on the lower time frames, different setups, different scenarios. It is not looking great, guys. This is looking quite bearish, and the bulls need to defend this area right over here if we want to think about a possibility of forming an impulsive move up, a higher low here, and then continuation back to the upside. I think this is the lowest probability scenario. I'll explain why I do believe that we are going to lower levels, and I'm going to explain why in the next coming minutes. Of course, guys, make sure to absolutely destroy that like button on your already 20 likes. Absolutely insane, guys. Thank you very much. We keep it educational, try and explain all the different scenarios. I'll be going through several scenarios that was mentioned in the Legends trading community. Okay, it was not easy. Of course, it was not easy. It is never easy in trading. We always want the highest probability setup. We remain patient for the best scenario, and it's always, it's not easy. Sometimes you're just hours waiting for the highest probability trade and you just don't get it, right? And that's how trading is, right? Unfortunately, I wish I could trade every minute, right? Well, if you do, you just need to be aware. The more you trade, the more probable it is to lose, right? It's a very, very hard game. You need to get into very high probability trading setups. So you don't want to just start randomly trading whatever, right? I think it's going to go up. I think it's going to go down. So anyway, let's talk about the pure technical levels, guys. I'm going to go and use a little bit of Elliott wave theory, a bit of harmonics, a bit of the levels that I would be interested in to the downside, the ones that I'm interested to the upside as well, and focus on the very low time frames. Okay, I'm going to try and explain myself as clear as possible, but it's not looking too great. Okay, this movement to the downside is not looking too great in my opinion, based on this move that we've just had the last few hours. It's very aggressive. It looks more like a wave 3. We have hit the 1.618 extension. So with this current move that has happened right now, because everything changes with trading, if we do manage to bounce above these lows, I will flip bullish. I'm going to explain why this pivot low cannot be overlapped, and if we do overlap that level, then I will give priority to the bulls to come and start sweeping all of these lower highs, right, in the next coming hours or days if we were to get a V-shaped recovery. But I need to give priority to the bears right now, and that is purely based with this huge aggressive move down. There is also an extremely complex Elliott wave count here that is telling me that this has been the end of a corrective move in a very, very complex WXY. Extremely complex. I don't like talking about this because Elliott wave theory, you need a lot of knowledge, and to understand it, we cannot just explain it here on a live stream in 5 minutes like we do with other certain indicators and levels. But there is a chance here. Just anybody that wants to look at that scenario. What is disturbing, of course, for the last few days is this movement to the downside. When we do take a look at Elliott wave theory, and we've moved down here with multiple 1-2 setups here, all right, I do see 5 waves here to the downside when we do take a look at the movement down that we had from this pivot high on the 26th of August. I do count obviously with multiple 1-2s inside of this very, very disturbing lower time frame downtrend, but overall the third wave being the most impulsive, coming back down to claim the low. So you got clear 3 peaks here forming 5 waves, and this is where it became very interesting to count the different scenarios, because what I do see here to the upside, and let's just keep it slightly higher time frame, not too complex, is basically an ABC move to the upside here. Then we go through easier stuff, guys, but this has to be shared here on on YouTube. I feel like sharing it. Then we got this movement to the downside in another ABC claiming the lows. Okay, there's only 3 waves down, 3 waves up here. And now you get this big fat mess right over here, which for me is basically an ABC flat, right? You've got an A wave move up, back down to claim the lows, and then another move up here, C wave, swing failure pattern from this pivot, forming a flat structure. And if we do count this, we need to count a possible larger time frame, WXY. Because in a WXY, when you do form a zigzag in an A wave, you can only form a flat structure or a triangle when you're forming a Y. And we basically formed a flat here, and we're moving down pretty aggressively, giving priority to the bears right now, only because of this move. Okay, I would give the bulls a chance without a doubt. I would have given them a chance to actually, you know, start breaking some highs and get momentum to continue to the upside. But the key trading setup for today, despite this being a ABC, right, looking at this as an impulse, because when you form a C wave, it's 5 waves up. Now, this is the question when you're at a higher time frame, is like, could this be a wave 1 and this a wave 2 and then a wave 3? Or is it the end of this C wave in this WXY and we're starting to move down very aggressively to the downside in the next coming days? And I'm going to explain the levels of Fibonacci and high confluence that we want to pay attention in the next coming hours. That is if we do not waterfall from this level and we're still in the 3rd wave. Okay, because we still could be in this 3rd wave. We got a beautiful reaction exactly at the 1.618 extension, right? When we take a look at the pivot high here to the pivot low, pivot high of today, we hit exactly that 1.618. I mean, I'm not saying that it's a great long position for a scalp. Overall, you can expect a few $100s of a bounce at the 1.618 extension. It's just a highly likely level to just stop and then get a reaction bounce. So we hit the 1.618, preferably after an ABC move, right? ABC, could you hit the 1.618 if you are looking for an ABC? Absolutely yes, but it's highly likely that it's more of an impulsive move down, meaning that it's likely to be a 3rd wave, meaning that we are going to see lower prices in the next coming days, despite what we form in the next coming hours. Now is where we come to the speculation of what kind of waves can we form in the next coming hours. And this is where I want to get you prepared, where we do have the biggest resistance zones, and you know, where we could be looking for shorts or either longs, right, for scalps or day trades. So I'm leaning a little bit more bearish. Of course, if the bulls want to, if we are looking at here, let me just save this in a folder here, guys. And let's just get ready here for the different scenarios, because I want to talk about obviously the other scenario that would be bullish, and we should only count this movement to the upside. Only counting this move to the upside, zooming in, we basically have extremely complex multiple 1-2s here, or basically in a contracting diagonal, forming a flat in a 1-2 right there. Then you have an expanding diagonal, very, very clear in 5 waves, right? Let me just, let me be clear here. You got a clear expanding diagonal right there in 5 waves. Very, very clear with your ABC move here. So without a doubt, yeah, without a doubt, there has been 5 waves here. Contracting diagonal with an ABC flat, expanding diagonal with a not regular ABC, actually a triangle in the ABC right there, and then you get the last 5th wave here. Very, very clear pivots right now. And now obviously the only bullish case scenario is, hey, we do not want to lose this 7.8 Fibonacci. We do not want to hit the 0.88 Fibonacci because it's rare for a wave 2, and it's just getting this movement down is too aggressive for a C wave. But I have to say, I have to say, as the 7/8 Fibonacci is kind of the last level for a wave 2, this is why we are getting this reaction here. I'm leaning a little bit more bearish, and I'm going to let the price develop in the next coming hours. But we've hit beautifully the 1.618 extension. We're hitting the 7/8. So we're getting a little bit of a reaction right now, because if we want to see this as an ABC, the bulls need to do magic here, right? They need to do magic in the next coming hours. And this is where I want to come to the conclusion, where we're going to find some insane opportunities depending on the range that we form here, right? The most important move here is the next one, right? And let me just explain right now on this. It's getting extremely complex, guys, with Elliott wave theory. I need to do definitely some tutorials on this, but we're going to explain the possibilities here to the right on the bearish case or the bullish case. If this were to be the start of an impulsive move to the upside, like I said, the bulls need to hold this. I'm leaning a little bit more bearish based on this scenario that I've explained. But if the bulls need to win here, this has to be the low. You know, the lows from this zone cannot be claimed. The bulls need to defend this area and get the push up. Okay, so I have to say, I need to give the bulls a chance for creating a wave 2 right there. Not losing this low. Then get a nice impulsive move to the upside, getting above $61,000, finally claiming this lower high, right? This is just a little bit of Elliott wave conclusion. Without a doubt, you can not only be bearish or only be bullish. We need to look at the different scenarios. We beautifully formed a 3-wave structure. Now the question is, will we get this bounce from here, which is very likely to happen in the next coming hours, and then get a leg down, form a 5th wave? That's where I'll be interested for a setup, without a doubt. I would be interested in a long trade on a failed auction. Why? Because it's pretty simple to understand that we've formed 5 waves. This is why at this moment it's extremely complex. At the moment, I would rather speculate on a wave 5 and then look for that corrective structure to claim the highs from the pivot bounce, right? If we do form one. This is something similar that happened right over here. Okay, for me it was relatively easy to detect this momentum to the downside in a 5-wave move down, right? Because what happened here is pivot high, pivot high from Thursday, pivot low, pivot high. Check this out, guys. Check this out right now. This movement down, small little bounce to the 382, 50% almost, leg down. Where did we hit? Where was this 3rd wave or C wave? It doesn't matter. We don't know what it is till we form this movement down. Where did we bounce? Where did we stop with a bit of volatility? At the 382 Fibonacci. Sorry, at the 1.618 Fibonacci extension, right? So now is when we analyze very carefully this extension move to the downside. And for me, it was relatively easy to detect this ABC move. We're saying, look, we come down here in a wave 5. We got the bounce. We're coming down. You know, this happened very early in the morning, so I didn't manage to long here, but it would have been nice for that flat speculation. But I detected the drop here. Swing failure pattern from this lower high right there, which is the 4th wave. And this was for me, very easy to detect, because once you have the 5-wave completion and you get this low being tested and an SFP, it's like, okay, we're going to bounce to this level and we're going to move down, back down to the lows. This was last week on Thursday, Friday, sorry. Thursday was the movement down. This was last Friday, looking for that ABC flat structure that was mentioned in the Legends trading community, right? This was basically this move over here, which was relatively easy to detect. We got 5 waves down, ABC. I'm looking for this to be a C wave in a flat. and then get the leg back down, okay, coming to 59,800. So now I want to come to the conclusion of what could happen here, because now we got three waves. Now we got the three waves, and you know, today's speculation for that C wave or third wave was also mentioned in the community. Get above the VWAP, create choppiness, preferably bearish CVD divergence at 59,300, 400 range, and look for a lower high because we need another wave down, right? Whether it's a C wave or a third wave, which is happening right now. So overall, in the Legends trading community, we talk about multiple different setups. We can't only stick to one setup. You need to try and look at the highest probability ones and the different scenarios. But this movement all the way up here to get this choppiness to the VWAP was a scenario based on, look, I'm looking for either an ABC or a 1, 2, 3, right? Get that choppiness here above the VWAP, form bearish CVD divergence, preferably choppiness, and roll back down. It's a scenario where you are detecting where the price can reject, right? So you know, we talk about multiple different things and we wait for the one that actually, you know, hits the level and looks to play out. So this is what happened right over here. So now we come, okay, that's already happened. I don't care your predictions that you talked about before. Let's come to the conclusion of what is the next prediction regarding the waves and the Fibonacci and basically the highest confluence point. And this is where, you know, I need your full attention here, because this is where we get into what we want to see to get into a trade, right? Like I said, I'm leaning a little bit more bearish, okay? But if the bulls, if we do get a bounce here and this ends up an ABC, you know, you could get into a teeny weeny small swing long attempt, because if this were to be a wave 2, which I'm already saying it's highly unlikely, this is unlikely to be the scenario of a wave 2 and we're going to form a wave 3 in the next coming days. I think those lows are going to be taken and we are going to break down, guys. I'm not panicking right now that we got the drop. It's just purely based on this is highly more likely, right? This scenario that I explained at the beginning. But if yeah, without a doubt, getting into a small little swing long position, basically risking peanuts, managing risk very well, to have the attempt, if this were to be a wave 2 over here, the movement up is going to get above this high, okay? It will. If we start breaking above, which would be for me the confirmation level is getting above this A wave right over there. This wave to the downside will be the confirmation that the price is going to come up to this high. And it's just a fact of Elliott wave theory, downtrend. We cannot overlap the wave 1. If we do get an aggressive move above that pivot, this will no longer be looking like 5 waves move down, right? So if we do, you know, what we're looking at here is this, a possibility of this, right? We do not know the bounce. It could get to 382, 50%. We'll come to some levels and some scenarios now, but if the bulls maintain, this is when you need to manage your risk very, very well, because I would even risk $5 for the attempt, right? Let's just risk $5. Might gain $20, right? For anybody that does not understand risk management and wants to get rich in one trade, well, you know, you can risk $5 and potentially gain 20 in the next coming days, right? Just so you see the silliness of, you know, taking the speculation, because this might be the ABC, very aggressive without a doubt. 7.8 Fibonacci, 1.618 extension from today's waves, 3 waves. If this were to be the low, that third wave is going to be extremely explosive, with no doubt, taking those highs at 61,200. So I'm going to say a swing long trade is definitely a possibility. I'm interested in CVD divergence here. But yeah, we're not forming any lower lows, no higher time frame We got one here ever so slightly from this pivot, but I don't like bearish. I don't like CVD divergence on the higher time frame. I don't trust them because what you build is lower time frame bearish CVD divergence, and you just continue to take the low, and take the low, right? So higher time frame bullish CVD divergence in this case, where we do have lower lows on Bybit, right? We do have a lot of shorts entering at this zone, but it all really counts on what happens next in the next coming minutes and a couple of hours. Because if we do continue to form local bearish CVD divergence like we are doing right now, you're just forming higher highs right now. Look at this massive pump of longs entering here. So it's just consistent lower highs on price action, and you're getting higher highs on the CVD on all exchanges. So there is people long in here at this level, which means you're going to take the low again with a breakdown or just a test. So the higher time frame bearish bullish CVD divergence really depends on what happens locally. And locally, we got people longing, so the lows are just going to be claimed again. So I don't like this scenario. Gotta be honest, it's the most unlikely scenario in my opinion. But of course, I would be speculating on a potential bounce here. And the main reason why, let's get this off the chart. We have hit the 1.618 extension from this movement to the downside. Already got a reaction bounce of a few $100s. I mean, if there's anybody aggressive just trading Fibonacci, right? We hit the 1.618 extension, meaning that this wave is 1.618 times longer than this, which is obviously a very common level as a target for a third wave. End of reaction, usually get those bounces at that 1.618. So now the question is, from this bounce, I would rather remain patient, because longing right now, could you long a double bottom possibility, take those lows? You know, could we take these lows and form a double bottom? Just because we have only retraced here to the 236 Fibonacci. We've only hit the 236 Fib, which is already a valid count for a fourth wave. So it is a valid count for a fourth wave. This is the only inconvenient, but with this being a wave one, quite long, this being a wave two, and a beautiful three-wave structure, very simple to understand, very simple to see. This has formed an ABC. We can clearly see a three-wave move here today. So what we're looking at right now, this is very shallow in time compared to the fourth wave, to the second wave. So if this were to be the fourth wave already hitting the 236 Fibonacci, it's the minimum requirement for a fourth wave, but the timing has been too fast. We've only just come all the way up there to that level. So I would say that a double bottom here would be a scenario looking for an ABC flat possibly. So I would say a double bottom here very locally. I would speculate on it to come all the way up to the 382 Fib. And I mean, that's a move of, $700. You're looking at VWAP. VWAP is a magnet. VWAP is extremely high. We are getting the reaction at the 7.8 Fibonacci from the movement from yesterday's lows to today's highs. I'm going to say it's a valid scalp long. We are getting the reaction at the 7.8 Fib, okay, from this movement. From this impulsive move, from this movement that we've had between yesterday and today, this movement, 7.8 Fibonacci, 1.618. If we come and claim those lows based on the bearish CVD divergence, I would be willing to get into a sniper long here. I would be willing to get into a sniper long trade on a double bottom, just because this needs to retrace. this right over here needs to have a larger pullback before continuing down. And it's going to be simple. The strategy is simple here. The strategy is claim the low, wick, double bottom, entry, stop loss, look for a larger move to the upside to then maybe come to lower levels. So you're basically longing the pullback after getting this massive impulsive move down. If we were to get a leg here to the upside, now is where we obviously need to look at the possibilities of this being it's going to be larger. Usually wave 4s are larger in time compared to wave 2. So if we are comparing this, if we are counting this as a wave 2, wave 4s are usually larger in timing, right? They're usually double, 1.5, double, triple even in timing compared to a wave 2. So it could take many hours to form a wave 4. But we'll be analyzing very carefully, of course, in the Legends trading community. But I wanted to talk about the possibilities. A bounce from here needs to happen at least to the 382. That is kind of the most of the times the 382 is hit. Something like there's a probability of 70 odd % of the 382 being hit in a wave 4, right? Or in any wave, basically. In any wave, the 382 is kind of the minimum real Fibonacci. The three most important fib levels is 382, 50%, and 618. Then, of course, you got 78 as an extension, and the 236 being a very shallow pullback. So preferably, you don't want to see, after such a large move down, just a retracement to the 236 and then down in a big wave. I don't think so. It is unlikely. So looking at the probability side, for this move to continue down very aggressively, to come and claim those lows from yesterday is very unlikely. There's very low probability without hitting the 382 as a minimum requirement, right? It's not a minimum requirement. It is basically a high chance that you are going to hit the 382 instead of just the 236 from this large impulse. So, like I said, if these bearish CVD divergence play out, which they should, right? This is where we come with the strategy. If these bearish CVD divergence, which are lower highs, higher highs on the CVD here locally, should be taking the low, I like the idea that the next movement down will fail auction swing failure pattern and get a nice rally to at least claim this lower high that we formed at the 236 Fibonacci, and even speculating to the 382 as a minimum. I mean, that is if we might just bounce from here, but it would be a nice realistic strategy, just because when you have an impulsive move and you consolidate and you just hit the 236 Fibonacci, and you do come down and claim the lows, it's extremely rare that you would get a big, large impulsive move down. It would be extremely rare, just because from this impulsive move down that we've had the last few hours, you've only retraced to the 236 Fibonacci. It's like, yeah, it's unlikely. Is it possible the selling pressure is just too big and we're just going to collapse? I have to say, it is definitely, it is possible, but it's unlikely that we do get a successful move down to the lows in the next coming minutes before getting a little bit more of a pullback after getting this impulsive move down. So let's set the alerts here right away, and I'm going to go through the comment section. Let's set that alert, because I'll go through the comment section. It's definitely a possible setup that we could pay attention. That low, highly likely to be claimed based on bearish CVD divergence. there is a situation here in getting into a short right now. It's purely based on your risk management. If you short here right now as a scalp, if I short here based on bearish CVD divergence, you're going to put your stop loss at the high, you're targeting the lows. You know, it's just really not a great zone to look for a short. You know, the bearish CVD divergence could continue to the upside. So shorting down here is just really not an option for me. I would rather speculate that this movement down needs a corrective move at least to the 382 Fibonacci as a minimum requirement, right? The most likely requirement. I mean, a minimum requirement here is the 236 on a wave 4, but meaning that the movement down here will not have steam to create a big impulsive move without getting a major move to the upside. So I will be willing to speculate on this scalp setup here. Set the alerts right now to get that move at least to hit the high of this 236 and obviously the 382. So looking at something like this, then you're probably looking at an ABC flat here before forming the fifth wave, right? Because what we're looking at here is the possibility of forming a fifth wave down. If you do break down successfully, then I would say that we're still inside of the third wave. You know, you're still inside of the third wave, but most commonly we have hit already the 1.618, right? It's a very common level to finish a wave 3, and that is basically where we are getting the reaction. We're consolidating, we're bouncing. We've bounced almost $500 already after hitting the 1.618, most commonly hit for a wave 3. Now is when you come to the conclusion, okay, where's the wave 4? Where's the pullback? Where's the bulls attempting to get into an uptrend and failing miserably, and then the leg down? Well, that is what we have here, right? That's probably the speculation that I'm looking at right now, because jumping into a short right now, FOMOing in here, is just purely based on risk management. You know, I could not put my stop loss above these highs because I'm very much aware that this is very shallow. And if I shorted here this bounce based on bearish CVD divergence, yeah, I could put stop loss above the high here, but just realizing that you could be forming a larger, corrective structure here. So let's see if those lows are taken now in the next coming minutes. And if we were to get a movement up here, say out of nowhere, right? Say suddenly we do not take the lows and we just consolidating, we form a high low and we get a bounce. This is going to be very, very interesting, of course. I mean, I do think the lows are going to be taken in the next coming minutes. But if we were to rally from here, it's not going to be easy. We want to see at least 382. 382 could be the level where it rejects, but it's not going to be easy. What we do not want to see, if we're speculating on bearish momentum to continue on the lower time frame, we do not want to see an overlap from the wave 1, right? So kind of the 382 and the 50% is going to be your limit zone, right? If you want to speculate that you are going to form another impulsive move down. So we really need to see how the price action develops in the next coming minutes, coming hours potentially, because it's not going to happen now in the next coming minutes. But if we do form a 3-wave structure, just say that we form a higher low here, right? Just for speculation, this ends up a higher low, not taking the lows, and we come up and claim the highs and the 382. Then I have to say, look, we formed a 3-wave move up here, and it would definitely have to speculate on the possibility of the 382 getting a pullback on that C wave. If we were to take a look at extension, just say that we form a higher low here, which I don't think is going to be the case. I think we're going to take those lows. Yeah, coming all the way up to the 1.618, 382 zone for a very extensive wave C, and then a roll back down. We would have to come to that conclusion right now if we do form a higher low without claiming those lows here. If this gets very explosive, if this does get very explosive, because on higher time frame, we need to give the bulls a chance, guys. We need to give the bulls a chance. Let me just mark this here as bearish impulse right there. We need to give the bulls a possibility here, because what if this is a wave 1, wave 2? Like I said, any swing traders, this is the level where the bulls want to defend without a doubt, because this could be that ABC structure here. Very, very 3-wavy. It's too aggressive. The C wave would be too aggressive, but a wave 2 most commonly does hit the 7/8 Fibonacci, and that is basically where we are getting this consolidation. So if we start moving very aggressively in a V-shaped recovery kind of style, this is why it won't be easy to speculate on a short here. We have to have very clear 3 waves up, very strong bearish CVD divergence, and obviously 50% Fibonacci from this local drop would have to be your ultimate level of entry in between 382 and 50%, and your stop loss needs to be above this pivot low, because, and you're obviously targeting a major wave down here to the lows at least, and obviously possibly continuation down, but you could not overlap this pivot, so you would have to have your stop loss above this pivot low. But we need that data. We need to formalize 3 waves. You really need to analyze how the price moves up to that level, because in the Legends trading community, I did see the possibility of forming a 3-wavy move up here, hitting 50% to 618 Fibonacci and forming a lower high. If you have bearish CVD divergence, even better. We're looking for a leg down to claim the lows at least. This is a scenario that we take a look at here and giving the explanation. This is why we need to remain patient and see how the price action develops, getting that movement to the upside, right? Regardless this, we are looking at that bearish case and we do move up. Like I said, we cannot overlap successfully the 50% Fibonacci. So if the price does come up to this zone, right, and forms a little bit of a 3-waver, and we start hitting 50% Fibonacci at $58,400, and preferably we do form bearish CVD divergence from this high, even better. If we were to get those higher highs, which we very likely will, at least on Bybit, we very likely will. If the price does suddenly move up here, not that aggressive, but moves up here in a 3-wave structure, we are very likely to form higher highs here and lower highs. This is going to be game on. This will be the ticket to confirm. Legends, there you have it. We got a possible wave 1, wave 2, wave 3, wave 4, wave 5. You got bearish CVD divergence. You're starting to hit the 382 Fibonacci and the 50% zone, and you're forming insane higher highs on the CVD. It's without a doubt a speculation short, with your stop loss above the invalidation of this impulsive move, which would be this pivot low right over here, because that is the wave 1. You do not want to overlap it. So that would be the actual level of invalidation. So you know where you're putting your stop loss, and you know where you're targeting basically, which is coming back down to the lows. I mean, looking at it like this, the risk to reward is not huge, but it would be a high probability trade setup, in my opinion, if you do get those bearish CVD divergence. If you get a bunch of people longing on Bybit right now, as we do get a corrective move up here, very, very choppy, and you suddenly see the CVD getting absolutely crazy, then this is your ticket, right? This will be your ticket with high probability to get the price pushed back down to the lows, right, which is going to be your take profit zone. Definitely a very, very highly likely on Bybit, because Bybit, obviously, you get these big massive spikes on CVD, and I do think that we will probably see Lots of FOMO longs here entering on Bybit, and just if CVD goes crazy, guys, it's just going to be a no-brainer. This is going to form a lower high and push down to the lows again. It's going to be a no-brainer. It definitely would take the chance there. When we do take a look at what happened, you get the deal, right? When you get a movement down, a bounce, you form lower highs on price action, and then on CVD you just get a massive big pump and you're forming higher highs. It's a no-brainer that you're likely going to take the lows again. Okay, so you just get all of those people FOMOing long, potentially thinking that this is the low, that you're back testing the level, and you're just getting that. You get lots of longs entering. Bearish CVDs back down. So if that were to be the case, in the next it might be a couple of hours, guys. Okay, it might not happen right now exactly, but if CVD needs to take this high on Bybit, if you form those high highs, there we go. If we start doing this with this movement up, oh, it's going to be looking great. It's going to be looking great here for that possible short trade. 382 obviously will be aggressive. The best zone would be in between the 382 and the 50%. And then you have the other case, which is a massive V-shaped recovery, right? And you're just blasting through all of the levels, right, in the coming hours, which I think is the unlikely scenario. But if you do move up very aggressively here in the next coming minutes, I would obviously say, hey, you know, this is moving very, very fast. It's moving very, very fast to the upside, hitting this level. It would be very, very aggressive to enter a short. But on the other side, if we move in a three-wave structure, so we do this, we form a higher low, then we form another move up. If we move like this, just like we moved like this here today, then obviously, yeah, you want to speculate on that short, right? If we move in a very chilled three-wave structure to the upside, gaining and timing momentum, not looking impulsive at all, then obviously that is going to be the moment that you're like, okay, this is good. I like it. This is a good speculation short position back down to the lows. But if we start moving up here, bam, bang, bang, boom, 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 like this, I would say, look, maybe this is the A wave, and, you know, or maybe this is a one wave up. It will be too aggressive, right? You could probably be doing, yeah. If we move very aggressively up to the levels, would be not interested in the short. I mean, if we do form very aggressive, very aggressive bearish CVD divergence, then, like I said, I really want a chilled three-waver, or look for the double bottom here, back up here to the 382, very likely. This would be the take profit zone. It's a very aggressive scalp trade. But like I explained before, the main reason why I believe that the price should not break down successfully here with a large move of over $1,000 is because we've only hit the 382 from this impulsive move. I would, you know, most of the times, over 70% of the times of an impulse up or down, over 70% of the times you at least hit the 382. More than 70% of the time. So yeah, there is that small percentage that doesn't just consolidates at the 236, right, and then moves down. But most of the times you do hit that level. This is why if these bearish CVD divergence play out, I would consider a double bottom locally here. Without a doubt, I like it. Let's go through the comment section and analyze the comment section. How are you guys doing? Make sure to destroy the like button, guys, on your way in or on your way out. Remember that you do have insane bonuses. I got some new bonuses on Bybit. You do get airdrops of $200. This is more for altcoins. There's very aggressive altcoins. If you sign up, you can claim your airdrop, guys, when you sign up with a link in the description. If you don't want to trade altcoins, there's even a better airdrop of $500. Once you sign up in the link in the description, guys, make sure to check it out. You got the 200 one, which is the aggressive altcoin one. And then you have the $500 one, which is the first link, guys. Make sure to claim your airdrop so you can trade with that airdrop. You have the steps to follow once you sign up, guys. This is on Bybit. If you cannot trade on Bybit, you do have bluffing. Bluffing, 10% cashback. I think it's an insane return. Whatever you deposit, you get 10% cashback, and you can use it for your trading, guys. No KYC platform. Check out bluffing. Great crypto exchange. There's hundreds of altcoins there to trade as well. I mainly trade Bitcoin. So, you know, I'm not really an altcoin trader. I usually just focus on Bitcoin and look for the highest probability trade on Bitcoin. So, bluffing. Yes, sir, Michael. Bybit is racist versus my country. Okay. Yeah, there's a lot of restrictions regarding Bybit. I think there's many countries that have restriction on Bybit. So the best option would be bluffing for me, of course. Bluffing, the best bonus would be for the no KYC platform would be bluffing, which is 10% cashback, guys. Check out bluffing down below. Anyway, weekly getting rejected. Let's talk about higher time frame. I mean, I'm looking at a very aggressive lower time frame scenarios, guys. Looking at very aggressive lower time frame Elliott wave theory, CVD. But let's talk about higher time frame scenarios. We're losing the weekly level. Someone's saying here in the comment section, what is that? The previous week close, previous week low. Let's take a look at previous week levels here. I have it on the chart somewhere. I'm trying to be organized here with my levels. Yeah, we got previous week low. Previous week low is kind of wanting to maintain as support, right? The previous week low, trying to maintain as support. It's basically the weekly open, I think, of this week. Let me just double check. Oh no, the weekly open. Let me just double check here on the weekly chart. Yeah, no, my bad. The previous week low, I need to refresh these levels. I got the previous week. I didn't change them, my bad. But yeah, you're saying the weekly level, not this one. Not this one. Need to reorganize the previous week levels. You always need to clean your chart and get the new levels on. But yeah, let's do that right away, guys. It's always important to take into consideration the previous week levels, okay? You know, should have done this yesterday. But when we do take a look at the previous week levels, they are very important to take into consideration. Okay, so regarding the big engulfing weekly candle that we had yesterday, we do not like this weekly candle close. Getting below the previous week close here. Open, sorry. This is an engulfing candle. It's not looking too great, obviously. Well, previous week levels, we always want to take them into consideration, such as the high, the low. Always good to take into consideration based on confluence, right? You can add it as confluence. Previous week high, previous week low. I always like to have previous month and previous week levels because they are good. Even the equilibrium, which is the 50% Fibonacci, guys, it's always good to have it on the chart to pull out, to add as confluence. So always can mark those levels here on the chart, guys, so you can mark them as well. You want to take them into consideration always. So we got previous week close right over here and got previous week low, and previous week equilibrium as well is very important, which is basically the 50% Fibonacci from the highs to the lows of the previous week. And when we do take a look at the fib levels, it is 60,745. We mark that level 60,745, if I'm not mistaken. It was, yeah, 745. We mark that level right over here, 60,745, and that is the previous week EQ, which is the equilibrium. We always take it into consideration, right? Hang on a second, let's put that, it's a 0 right there. Always good to have these ones, and we have everything organized here on the previous week levels. Should have done this before, guys. Forgot to have my previous week levels marked up here on the chart. So we organize it here as we're doing the live stream. And then we'll be analyzing higher time frame levels, naked pointer controls, and analyze the levels of resistance and support. There we go. So anyway, lower time frames has been talked about, guys. Higher time frames is boring, right? But we need to be ready for higher time frame levels, right? We've been zooming in here on the possibilities of, hey, what if this is a wave 2 on higher time frames, right? And we're going to form a wave 3 in the next coming days. That is the most unlikely scenario. I think that's the unlikely scenario that could happen. I think what is building up right now is basically a wave 1, wave 2, wave 3. We end the formation. We're bubbling up here with a fourth wave, being it a flat or you know, whatever. But it's really important to form the next waves to determine what could it be. Because yeah, right now, like I said, we've only retraced to the 236 Fibonacci, meaning that we could get continuation to the downside if we do not SFP from the low. We could get continuation to the downside because we've only hit the 236. So we could still be in the third wave here, and you know, I would speculate that we are going to double bottom here, and we're going to come up to the 382 at least. So I'm waiting to see if we do get that bottom hit and we form a local double bottom, as I mentioned at the beginning of the stream. I think it would be a good speculation scalp long, just putting stop loss quickly beneath the low as we form that wick. I think it's definitely a scenario. Let's go through the comment section. We're getting that leg down now. Let's see if we do get that low taken, because we are getting aggressive bearish CVD divergence. Look at BITFLEX. BITFLEX is just going, there's only longs entering on BITFLEX at the moment, which is forming lower highs, higher highs on CVD, higher highs. Lows highly likely are going to be taken in the next coming minutes. So let's just wait patiently and see. There is some news. We got the stock market, my goodness, getting an epic dump here. What an epic dump on the stock market. I mean, it's not that epic, but it is getting a pretty nice corrective move today. A correction of over 1.5%. That for the S&P 500 is a relatively strong correction. So S&P 500 not managing to get above the 0.88 Fibonacci from the drop that we had here the last couple of weeks of July and the first week of August, getting that major crash because of Japan. 0.88 Fibonacci. If 0.88 is hit, even though we do correct here, I do believe that we are going to hit all-time highs in the next coming weeks, guys. Coming all the way up to the 0.88 Fibonacci is there's extreme high probability that the all-time highs are going to be hit in the next coming weeks, guys. So yeah, I would say that even though we pull back, this would not be a panic pullback. I believe that we're going to find some support here at some stage and come and form new all-time highs on the S&P 500. Without a doubt, this is not a wouldn't be panicking after hitting the 0.88. 0.88 Fibonacci would be extremely rare to be a top right there on the S&P 500 and start moving down very aggressively in the coming weeks, right? With the recession and with everything. Anyway, thank you, Andy, again for the crypto analysis. RSKNOR. Thank you very much for joining the live stream. Nvidia, is Nvidia bleeding? Oh my goodness. Shall we take a look at Nvidia? DXY is pumping today a little bit, last few days. We just tested the lows here from December 2023. We mentioned that this level was likely going to get a reaction bounce. So we are getting that reaction bounce. Let's see if we do see some resistance now. From the higher low, from the scene of the crime here, that's been respected as support, and, start struggling with this, level of support and start forming a lower high and continue back down. That's the ideal scenario that we want to see on the DXY. But for the moment, this pump looks like it's not finished. So got the reaction from that low, getting the bounce. Let's take a look at Nvidia. What's going on with Nvidia? Is it getting a major corrective move? It is dropping pretty aggressively today. Looking pretty nasty, this drop. let's take a look at the comment section, most importantly, guys, because comment section, I need to say hello. Check the monthly, Andy, that's dirty. The monthly candle, the monthly time frame, let's take a look at that right away. Check the monthly. It's a bit of an engulfing here from this doji. We formed a little bit of a doji candle here in July. But this is very engulfing without a doubt. But we formed one right over here, right? We formed an engulfing candle back in April. And we did get a very good bounce here. Okay. Obviously, we did continue down. So overall, that engulfing. But this doesn't mean that we need to continue down right now. We could get a major rally first and then continue down, just like we did here the previous month. But as we know, we do know that September is one of the most bearish months, not only for stock market, for Bitcoin as well, guys. We do have September being one of the worst months throughout the history of Bitcoin, right? We've seen the last decade on Bitcoin, and September, look at this. September has been a very, very bad month for Bitcoin most of the time. But October is known by Uptober, right? We got October being insane. October has been the best month for Bitcoin throughout the previous years, right? Well, I mean, you could argue discuss November as well. I mean, October, November, last couple of years, last few years hasn't been too good. February's usually been quite good. But October has been epic. October is a great month. It's usually a good month for stock market as well. And, you know, we're going to have to see. September usually bearish. So I asked this question yesterday. A lot of the people said, I am actually bearish for September. September, we got 70% of the people on a poll saying that I'm bearish for September. I would like to ask again, because we got slightly a bit more people today. And I would really want to know your opinion. Are you bearish for September on Bitcoin, stock market, and everything a bit in general, right? Let me know right away on the poll, guys. Are you bearish for September on Bitcoin? Let me know right away on the poll, and I'm going to go quickly through the comment section. I want to say we got 35k here, says from Random Stuff TV. We got 35k as a target zone. That is without a doubt a very aggressive target. That is without a doubt a very aggressive target. If you are speculating that we are going to come all the way down to $35,000, wow, yeah. I have to say, higher time frame, keeping it very simple for the bulls, we cannot retrace lower than the 618 Fibonacci. Okay, so yeah, this would not be good. Obviously, we cannot be bearish as we lose this level, but when we take a look at Elliott wave theory, just the most simple way on a higher time frame, there is this scenario right over here that we are in a fourth wave. We're going to form a fifth wave in the next coming months, being very explosive or not too explosive, or being a double top, right? The bulls have this case, right? Fifth wave, it's very relative on the target zone, but we should not really look how we tapped the 50% Fibonacci to perfection, and that is only on Bybit, because when we do count the low, right? But even though, yeah, on Bybit, obviously on other exchanges we did have a major wick down on August the 23rd, which was not printed on the spot exchanges. The official low on this impulsive move, it was created in September of 2023. Okay, this was a major liquidation event that only happened on most of the futures platforms. Okay, not on the spot ones. So the official low, it formed on September here of 2023, and we did hit very nicely the 50% Fibonacci and got an epic bounce. This was back in the 5th of August, right? The 5th of August was when we got that leg down. So this is already a fourth wave target level. Okay, so maybe we're gonna, maybe we're not gonna lose 49k, and we are, this has been the retracement low, guys. We have to give the bulls a chance. on higher time frame. Maybe, and this is 50%, is the most common target for a wave 4. And we just tapped it on the higher time frames when we take a look at the low here to the high. So, hey, you judge by, you judge by this Fibonacci level here. If we are looking at higher time frame bullishness, the low could be in. Of course, then there is multiple different corrective structures here that you can count in WXY, ABC, and you can get extremely complex. There's still a bullish count if you were to claim those lows based on a WXY structure here. But we ain't going to go down the rabbit hole to take a look at that. We're not interested. We're going to keep it a little bit more simple. I would not be bearish if we come down to $49,000 sub. I do see the possibility of the low being bought back up again. So I am going to say that 35K is unlikely. I think $35,000 is unlikely. Could it be possible? Yes. But if we were to get a movement down to those levels, I think the price getting below $49,000, there's already going to be so much bullish pressure, in my opinion, unless we get a devastating recession, depression, right? A confirmed economic financial crash, and it's going to be worse than we expect. Then yeah, we could go down to 35 and even sub $30,000, right? Go to the 20K levels again. Then obviously that would confirm that I wouldn't flip bearish because you cannot flip bearish once you got the move down to very aggressive low levels. You just have to buy, right? I would have to just buy here at 30K, 20K, and just repeat the cycle again, right? You cannot flip bearish when the move is broken all of the higher time frame bullish scenarios. It's just you would have to reaccumulate and then make sure to sell at all-time high, right? But it would not be looking good. It could take longer than expected. It could get boring, right? You could get into a longer... That's pure speculation. We ain't going to talk about that. Anybody can speculate on that, so let's just not talk about it. So I would be bullish. If we do drop down below $49,000 and we recover from the low, I would still speculate on this scenario as long as we do not lose the 618 Fibonacci, which would already invalidate a possible fourth wave here. I mean, the confirmed invalidation would be the wave 1 overlap. But 618 is usually not hit on a wave 4. Okay, for me, it's already the invalidation level on this higher time frame. So you would really want to hold in between 43K and 49K. And the main reason why I do believe that if we do drop down there is purely based on this, on higher time frame Elliott wave theory. And just because the last few weeks, few months that we've come down to the lows of the range, we've had insane V-shaped recoveries. Claim the low from May, big buying pressure coming in, a small little reaccumulation happening here, and woof. Same scenario here. You claim that low. What do you think happened here? Huge amount of stop losses and limit long positions. Huge amount of limit buys and limit longs. This is why you get this reaction. So you just need to come to the conclusion with the same scenario. You come down to 49K. Don't you think that there is a huge amount of stops and limit long buys at this level? This ain't going to be a successful breakdown to $35,000. This is going to get a huge reaction bounce. Without a doubt, in my opinion, because you're stopping out all of the over leveraged long positions that have been getting in here or will be getting in here at the pullback. And you will be having a lot of long spot entries here as well. So you're gonna that reaction bounce is just an automatic rally based on the amount of bullish pressure that there is. And don't say it's not going to happen, because that's what usually happens, right? You can see it right over here. Claim the low, automatic reaction, lots of limit longs and limit spot buys. Automatic reaction after a few weeks. Same here. Well, you have to come to the conclusion that that is very likely to happen here as well. And then this might be the low, right? This might be the one that actually bottoms out, say 45K, 47K or not. But I think it could be an epic swing long position, guys. This will not be the moment to panic. It will be the moment to start believing. And the best confirmation scenario here, if you want to get into a swing long trade, is getting the recovery from that low. So without a doubt, you are going to get that recovery, but you want to get that closest entry point to the recovery of the low. And this is a swing long, right? You're speculating on a much larger impulsive move after a few weeks after claiming that low. So, you cannot be bearish down here, guys. It's like being bearish here, right? With the Monday's crash. There was a lot of panic, but we got a very good, strong V shape, and it pumped over $10,000 in a matter of a couple of weeks. So, make sure to stay strong, because there's a very high probability that you can V shape here from this low. Right, there's going to be a lot of buying pressure. There's going to be a lot of limit longs. Big money wants to buy here, so the V shape is very likely to happen. So yeah, let's Andy 0.618 level hit the BTC as to lose the second highest volume node. Right. There is the speculation of the diamond pattern, guys. Who likes a diamond pattern? Where's that diamond pattern? We got the diamond pattern here, guys. This is more locally. This is more This is more looking at the possibility of the which is extremely unlikely, I gotta say. I don't like this scenario at all. Of course, you could claim these lows from the 16th of August. It is a reaction low, $56,000. It's a very aggressive liquidity grab, kind of swing long. I think it could be a day trade swing long level. It could take a couple of days to get a reaction and bounce. It would be very aggressive. There is only one bullish case scenario if we do take down those lows, which is the very unlikely. We talked about it the other day, being this a wave one right over here, and that we are forming an ABC flat. The thing about this ABC flat, it's extremely long in time compared to the impulsive move. So it's very unlikely to happen, but it is possible. It is possible you could form a diamond pattern here, and you could get a reaction at the 618 Fibonacci. Okay, it could happen. Come down 618 fib level, claim these lows. I even prefer this pivot low for a swing failure pattern, without a doubt. We mentioned this level. There's a lot of confluence. 54,500. This level for a swing failure pattern is epic. I'm going to set the alerts, and even though if I'm sleeping, I need to get into a very aggressive scalp long, because it would be enough if we bounce $300, a few $100. If we bounce a few $100, it's going to be enough for me to bank on that move. But this is without a doubt the best level. You've got the golden pocket from the low of the 5th of August to the highs here that we formed on the 25th of August. And you got the first higher low after this major uptrend. It's the first higher low. I love the first higher low. It's a almost guaranteed liquidity grab level and a bounce. It happens multiple times. I trade these on the lower time frames, as you know, in the Legends trading community, where we were detecting that easy peasy, gotta say. I mean, this was easy. Trading is never easy, but when you find a scenario and it is easy, you need to say this was actually relatively easy to detect. When you get a first dead cat bounce from a major move to the downside, and you form a lower high pivot from a very aggressive move down, this is why I'm excited to see what price action we develop in the next coming hours, guys, because we got the movement down now. I'm waiting for the range to be a fourth wave, and this is the easiest levels to trade in a range on a fourth wave potentially, right? Where you have the dead cat bounce high, right over here. It has to be this one. Yeah, this one right over here. I was just looking at the yeah, it is this one basically. This is the easiest level to get into a swing short, into a short swing failure pattern short position. This is the easiest level. The first wave here, right after a major move, the first dead cat bounce in this case. It's such a good level, guys. It's such a good level. This is the level that we speculated just a few days ago. Hit that 59,800. This level is going to get a rejection. I'm telling you, it's going to reject, even if it's a few $100 or $1,000 or $2,000, right? Which it ended up retracing over $1,000. But we're talking about, this is the level that you want to get into. It's the dead cat bounce high. We're ranging, slightly forming lower lows. We're getting this choppiness and this downtrend. This level is a great short. We wicked, we back tested it, and we got the movement down. So this is why on the higher time frame, I mean, this is even better. This is a level just to be ready, set the alerts. I got some alerts at that level on the other exchanges, and I hope to wake up because I don't want to miss these. There's been a lot of trading opportunities that I missed out because I was asleep. And this one over here, without a doubt, is a very, very good swing failure pattern because we do have a daily level as well at that zone. There's a couple of daily levels actually. We got naked point of control at that zone as well. There's a naked point of control from the 5th of August, which was from, well, I'm not sure if it's the 5th. I'm not sure if it's, yeah, we can confirm that right away. It's either the 5th of August or the 6th of August, Monday or Tuesday. Yeah, it's actually from the Monday drop. There's a naked point of control from the very aggressive move down that we had on Monday, the 5th of August, which has a high volume. So that volume profile point of control, yeah, that's a good level without a doubt. And it's exactly beneath this higher low. So yeah, without a doubt, this is an epic swing failure pattern level. This is a must, guys. It's a must. Set the alerts. Managing risk is extremely simple. So because you just hit the level, you get back above, stop loss is at the low, you entry, you're looking for that bounce of several $100s. It's just a must level. It's a must. Higher time frame, first higher low from this uptrend that we formed, and you got the naked point of control from the 5th of August, and this is a high volume node. This movement down was a move down with a very aggressive volume. So that naked point of control from the 5th of August is without a doubt very important, and it's exactly at that higher low right there. And when we add more confluence, just aligning all of the planets for the perfect situation, we have the 618 Fibonacci, golden pocket, exactly at the lows, 61865. It's exactly there. So this level is good, guys. This level is muy bueno, very good. The strategy is simple: swing failure pattern, stop loss at the low, and look for that epic bounce. I'm going to aggressively scalp this, like high leverage, high capital, just for a quick 2-to-1, 3-to-1 risk reward. But I would also swing long, so get into a chill long position, stop loss at the low, very low leverage, low capital, and expect a move of several $1,000s to the upside. I will. This is a level to get into a very aggressive scalp and also leave a chilled swing long, because it might be the low and you might be forming this diamond pattern here overall, right? I would give it a chance. I would give a chance here for the higher time frames to form a diamond reversal pattern. I'm trying to get this out of the way, guys. 1 second. Where's the diamond pattern? Are you serious? Are you serious? Trying to delete this diamond reversal pattern, guys. Who knows about a diamond reversal pattern? Let me know in the comment section. Do you think this is possible? If we do get that leg down to $54,000 or $55,000, do you reckon that a diamond reversal pattern, you would have to say that this is coming from a downtrend because you're forming lower highs and lower lows? because you would be confused, right? Is it a diamond top and it should break down, or is it a diamond bottom? Well, locally it's coming from a downtrend, so it would have to be a diamond bottom pattern. Do you think this is possible, legends, or should I just stop talking BS and focus on the pure technical analysis on the lower time frames, guys? Because sometimes I'll lose it. You need to let me know in the comment section. Andy, stop talking crap right away about this diamond pattern on the high time frames, and please focus on lower time frames, levels of confluence, high probability scenarios, and good risk management. But anybody that's not aware about that diamond pattern here, guys, it's a reversal coming from a downtrend, and what you form is higher highs and lower highs, and higher highs and lower lows, and lower highs and higher lows, forming a kind of a diamond formation. We got the wick in the middle, so hey, if it does pull back down to that zone, hey, why not give the bulls a chance, right? Could it bounce in this zone for a swing long? Woo, not going to be easy. I prefer to day trade and instead of believing this, guys, because don't get me wrong, there's going to be a lot of people believing on this diamond reversal pattern, right? Or that if we do dip beneath this low, and they're probably going to enter some swing longs and add to the position, right? Because when you swing trading, right, you would probably want to add to position, right? Add to the position. I'm getting into a swing long. My invalidation is at the lows here, right? And the risk to reward to all-time high, yeah, it could be good, but there's no way I would be doing this. You know, I'm not a proper swing trader myself. If you see me in a trade for over a week, it's because I scalped and I took 70% profits and I left the trade and it's there. You know, not a swing trader to myself. We can detect swing trading levels, but I'm intraday trading, and I might have a trade open from the day that I would say, okay, you know, we've got that trade open, and I left some of that trade open to show here on the streams. But all influencers, analysts tell us the so-called no future that we go down. Easy trading. Not sure if I understand you there. But yeah, let me know. What do you think, guys? The diamond looks good. The diamond looks good. You know, this diamond looks good based on the... and what you need for an official diamond pattern when we read it, when we study it on a textbook, is a high, large move. Okay, a large move in the center with the highest volume, right? If you take a look at the textbook diamond pattern on technical analysis, this very much meets the requirements, because from the beginning of the formation to the spike in the middle, it's where you have the highest spike in volume. A diamond pattern, the center bit needs to have the highest volume. So yeah, it meets all of the requirements, but the percentage probabilities of a diamond pattern playing out, I think, is something like 60 odd percent. I'm not sure if it's 62 or 64 or something, but the probabilities are not very, very high. They can break down or break up. It is really not. But there is slightly higher that it could reverse. It is coming from a downtrend. If the diamond would be here, then obviously it would be a top. Probably there was one right there. But if it's coming from a downtrend, then it's a bottom, right? So it looks acceptable. We're gonna have to see here in the next coming days if we do get choppiness and we maintain this $55,000 range. It is something that we are going to talk about. If we start moving down here and we create the choppiness in this zone, we will be talking about, guys, we could speculate on a diamond bottom, and this might be an epic swing long trading zone. The only bad thing about a diamond pattern is you never know where the low can be. This could come like this. This could still be a diamond and you've retraced all the way down here. and it could still form a higher low, and you're still forming a diamond pattern. So they're not the greatest, but it could be a signal, guys, that we could form a higher low here at some point. So we need to give the bulls a chance on a higher time frame, just purely based on this very aggressive volatile move that we had the first week of August, with the panic from Japan confirming, on the 5th of August, forming this middle center spike down. But anyway, 51% says Mete. Yeah, 51% chance in getting the reversal. Yes. This diamond pattern, gotta say, diamond pattern is solid in my opinion. Yeah, we do. Many do play out. Many do play out. We did see a couple of diamond patterns the last few months. I can't remember where right now, but yeah, on lower time frames, or yeah, not sure where. I mean, I remember talking about some diamond patterns not too long ago. But anyway, it would be a very, very large one, and supposedly the technical target is the center of the diamond, and the center bit, right, is basically once you start breaking out, and it's very relative, okay, because I mean on higher time frame I think it would be easier to detect, but you could form another move up here and back down, and you would technically still be forming a possible diamond pattern, right? It could really extend. It's just really not a reliable. It could just say, okay, we could reverse based on a diamond pattern, but based on trading levels, there's no way to know where to exactly enter and place your stop loss if you want to manage risk. But anyway, if this were to be the case, and we start breaking out, this is how you measure it, right? You get the center of the diamond, and you basically put it all the way to the center of the breakout. The center of the spike, and that would be your measured move. So it would be obviously breaking all-time highs. It's a very old school textbook analysis projection, right? That sometimes does play out. Let's be honest, sometimes it does play out. From Google, let's take a look. It's formed by two symmetrical triangles that create a diamond shape. In 82% of the cases, a diamond bottom results in a bullish output, and a 79% of cases, the price objectively is reached. Well, it seems like high probability based on what Google says, right? So we have to say it does not look bad. It does not look bad. Diamond pattern, no. Diamond price, yes. Action, yes. Mustafa, very true. I mean, this was only higher time frame speculation, right? Okay, there's no big major trading setups that we can take a look at based on that lower time frame diamond pattern. Wall Street is going more red. We do have Nvidia, we do have the S&P 500. Probably Bitcoin is going to get that red continuation, guys. Ain't looking that great. Make sure to destroy the like button for the algorithm, guys. If you want to continue seeing me here. At the beginning of the stream, we talked about Elliott wave and possible scenarios that could happen locally. So make sure to check out the first 10-20 minutes. We go through this movement down. What could it be? Where could we find the levels of resistance, and where could we find the levels of support more locally, and the Fibonacci and setups? Check out the first 10-20 minutes of the stream. That's where we talk about it, guys. Let's go through some news. Who wants to know about news? We take liquidity out on 55k. Yeah, very much possible. There's no doubt. When we take a look at the liquidity heat map, we do have right now locally a lot of liquidity beneath $57,000, legends. There is hundreds of dollars, hundreds of millions of dollars of long liquidations beneath 57k, guys. So it's a no-brainer. I think we're very likely going to get that pushed down to claim the liquidity in the next coming days. Yeah, very likely in my personal opinion. Let's talk about some higher time frame bullish news scenarios right away, my legends, my favorite legend community. We do have updated list of public traded companies with an official Bitcoin treasury strategy. We do have obviously MicroStrategy, Marathon Digital, Block, Boya, Fold, MetaPlanet, WonderFi, Bitcoin.app, more big players adding Bitcoin, of course, MicroStrategy being the top one with 226 million Bitcoin. 226,000, sorry, I'm thinking millions now, I don't know why. 226,000 Bitcoin, not millions of dollars, Bitcoin. So massive amount of Bitcoin they have, MicroStrategy. We have other companies that are picking up. They're doing it quite okay. MetaPlanet 360, you know, they are picking up. So pretty cool to see. And they adding, I know MicroStrategy just adds and adds and adds throughout the months, which is pretty crazy. They never sell. That's what Michael Saylor, right? You never sell your Bitcoin, you only buy it more and more, which is pretty ambitious. It would be good to reduce the open interest. We got this guy here on Twitter by 10% in the near future. Without a doubt, it would be nice. We are seeing a lot of people quite bullish and a lot of hopium that we are going to bounce. We're going to bounce very soon. We're going to form a low here, and we're probably going to drop down a few $1,000s more, because when we see the open interest not taking a major hit, then we don't get the bounce, right? And this is very interesting to see throughout the last few months, how open interest decreases very aggressively, kind of resetting the market. It's very healthy, obviously, to get a major bounce and a major move up. And that is what happened here on the first week of August, right? I'm not sure if you guys can see this. I got my head in the middle here. So let's get myself out of the way. This happened on the first week of August. We got open interest decreasing very aggressively, over 16%. The first week of August, which was obviously a good reset. We got a major bounce of over $10,000 throughout the last few weeks. And you can see it also here in July, major drop down, okay, big reset on open interest. And we haven't seen a proper reset on open interest here. So that is really what we want to see. This is very likely going to happen in the next coming days. If we were to drop down several $1,000s, would be a nice reset of the market to then get that final bounce to the upside in the coming weeks, possibly, right? If the bearish case does not happen, we're getting people calling for 35k in the comment section. I want to say calm down. So let's take out $54,000 first, and then 49k, and then we can talk about maybe claiming 35k, right? Because 35k is very far away still. This whale bought 322 Bitcoin. We got some whales adding up more Bitcoin. He just bought 2,322 BTC in the last 5 days. Currently holds over 8,881 Bitcoin. So they are whales. They are big players accumulating. We know that wallets holding more than 100 Bitcoin is increasing throughout the last few weeks. So big players are accumulating. Of course, we got selling pressure from the miners. We got also ETF outflows. So it's a bit of a balance at the moment, right? Unless we have something that is very fearful happening in the next coming weeks, that could have a sell-off of $10,000, $20,000, on the Bitcoin price. We just never know how fear can impact the market, right? But overall, it's still not looking too bad for Bitcoin on the higher time frames. US interest rate cuts could see Bitcoin drop to $45,000 in September, according to Bitfinex. Are you scared about the interest rate cuts, guys? On higher time frames, we know it does not look great. The last several decades that we've had interest rate increasing and forming a plateau for a few months, and then interest rate cuts happening, we've always entered the recession after that scenario. So is that going to happen again, guys? We hit the plateau here in 2007, started decreasing, started cutting rates in late 2007, big recession. Same in the 2000s, dot-com bubble, stock market crash, small little recession of a few months, but nevertheless, still a recession happening. Are you scared about interest rate cuts, guys? I am. I gotta say, I'm very scared, but I'm very excited because I want to buy cheaper Bitcoin and cheaper altcoins. I would be ready for that move down, guys. Let me know if you are ready for that devastating collapse because of interest rate cuts and recession. Bring it on, guys. Let's get that Bitcoin down to 30K. I'll be ready to buy. I'll be buying already, guys, below $49,000. I'm gonna stop buying altcoins because I've been buying quite a bit of altcoins the last couple of weeks. Yeah. I want to reveal my altcoin portfolio, but I want to keep it exciting. You know, if we do get over 500 likes, I'll be sharing my entire portfolio of altcoins in the next stream. Okay, it's a $250,000 altcoin portfolio, just altcoins, and I want to share it completely. So maybe you don't care about my altcoin portfolio, but I just want to keep it exciting and share my $250,000 altcoin portfolio, just to share. And I know lots of you know that most of it is Chainlink. So Andy's portfolio, 99% Chainlink. It's not 99, but it is a high percentage. But yeah, smash the like. Let's go, guys. Absolutely. I would really, I want to share anyway because I don't really matter, but just to hype it up, get some likes here in the comment section. If we do get to 500 likes, I'm sharing the altcoin portfolio, which is $250,000, guys. Exactly $250,000. It did drop a few $1,000s these last few days. Right now it's valued at $250,000. Maybe next 2 months it'll be valued at 50K, right? And I've lost $200,000. Well, you don't lose if you don't sell, right? But yeah, let's get that like button smashed, and I will share my entire altcoin portfolio basically. There's no Bitcoin there, or no Ethereum, or no stable coins. That is in another wallet. Let's go right away. And that's very risky, guys. I wouldn't have a multi-million altcoin portfolio. I mean, maybe on Ethereum and Chainlink, but I think altcoins, it's really, really pure speculation. We really don't know if we are going to get that altcoin big season. I believe it's going to happen. I believe it's going to happen eventually at some point. It might extend for another couple of years, but it's going to happen. You know, you need to believe on some projects that do have good fundamentals and good partnerships, and you need to invest something, right? Just for the speculation that it could do very well. Obviously, I have no meme coins in this altcoin portfolio. Meme coins is really 100% gamble in my opinion, right? But other altcoins that have good fundamentals and good projects. BTC is flat lined, lol. Yeah, it's pretty flat in this area. Wow, yeah, pretty flat. It's probably forming a very, very big lower time frame symmetrical triangle, and it's ready to pop. Yeah, when we're forming this symmetrical triangle, I would be a little bit skeptical right now about getting into a double bottom. The situation that I was explaining here at the beginning of the stream was for this to get a successful breakdown without retracing to the 382 Fibonacci, just hitting the 236 is extremely rare. I would really expect the price to do something like this. Swing failure pattern, double bottom, whatever, and then get that move up to the 382. Just because from this very large impulsive move down, it would be extremely rare to just continue down very aggressively and drop another $1,000. It would be very, very rare without getting a proper pullback corrective move to the 382 as a minimum, right? It's just more than 70% of the times from an impulsive move, you retrace at least to the 382. Very, very low percentage moves just retrace to the 236 and then continues dropping very aggressively. So now that we've stopped, it looks good. We either break up from here, and then obviously we'd analyze the situation. I would really love a three-wave structure here to speculate on that ABC back down to the lows. We mentioned this at the beginning of the stream. Or break down from here and look for that local double bottom. I would speculate on this because, yeah, 382 kind of needs to be hit as a minimum, right? Legends, we're getting that like button going up, baby. Yes, sir. Let's do it. Halving is catalyst. Halving is catalyst. Halving is catalyst. What do you mean? What do you mean that the halving is catalyst? Liquidity, another nutty here nut. Mariela, thank you very much for joining. Legends, thank you very much for joining today's live stream. We got over 600 people. Today has been a pretty cool one. We've got, over 600 people on the live stream. Thank you very much, Legends, for joining, being around. We go through the analysis at the beginning on lower time frames. The first 10-20 minutes going in detail, higher time frame. Looking at set levels and scenarios. Remember, guys, this pivot low on higher time frame is a must. We have so much confluence at this pivot. 54,500 is a reaction level. It's going to bounce several $100s, if not a couple of thousand. It's the 618 from this move. It's you got the diamond pattern possibility. You got the pivot low for an SFP. You got a daily level and a naked point of control at that zone as well. It's just such an epic level. The $54,500. It's a higher time frame level. So yeah, very, very nice level indeed. We'll go through higher time frames, lower time frames, Elliott wave theory, technical analysis. Legends, thank you very much. I'm tired out. I didn't do video update today. I will do video update tomorrow, going purely on what's the zones locally, and do a nice live stream as well. Make sure to subscribe if you're new to the channel. Thank you very much for joining. And if you want to join the Legends trading community, it's the Discord. You have the first link, guys. This is where I go in detail every single day with the rest of the coaches, looking at different scenarios, just like this possible lower high to get a leg down. And this actually did happen very, very nicely. You want to join the Legends trading community where we go in detail every single day for the different setups that could happen locally for Bitcoin. Thank you, everybody. Much love to you, and I'll see you in the next video.